Morning, everybody. Mike Vacchi, Princetontrader.com, here with your Tuesday morning market webcast. Okay, we'll briefly talk about the daily chart. We had a band ride Thursday, Friday of last week. They needed to get back up over 42, 43, 44 to engage it. Didn't get it done. So that's done now. Band ride's over. We're pulling back a little bit. Now, before everybody gets all excited, we pulled back a little bit here. And we saw how that ended. So you're getting the next little pullback. You got the 9-day simple down at 2021, but the key area for me still remains the 24.26, 24.27 area, and here's why. If you missed yesterday's video, you've got the Friday low down at 27. Weekly pivot comes in this week, 24.2663. So they're essentially matched up within a couple of ticks. This should get a test today. It's still early in the week, and it is still prime time for testing the weekly pivot. The weekly pivot opened up as far as a level that was open to be hit yesterday morning. Didn't do much after that. It really hung around in a tight range. I'm currently, I got short the last couple hours of the day. I'm short 36.75. Took some profits. I have some left, and I just want to see how it reacts when we get down to 26.27. One of a couple things is going to happen. It's going to create a floor. It's going to create a double bottom. It's going to bounce off of there. That's the gateway to higher highs if the bulls can really get some momentum going. The other option is this. It trades below and converts. If it trades below and converts, then you are you're looking at potentially moves down, the 20 area, 17 area, and then the big area is last week's low, the weekly pivot test support down at 24.03. A lot of this is in the bear's court. Everybody wants the market to pull back, which is why it can't pull back on a sustainable basis. The shorts are too weak. They get scared. They bounce. We go higher. Absent news, or even with news, it hasn't really been particularly interested in going down. We used to say, well, they're going to need news to take it down. We've had news. We've got geopolitical destabilization. We've got domestic issues. We have uncertainty. All these things are there, and the market continues to trade higher. So to me, I think the bears are going to have to start to do it the old-fashioned way. They're going to have to start to convert levels that matter and keep them converted. It's a price thing, okay? A good start is the weekly pivot. It's early in the week. The best way to have directional moves down Wednesday, Thursday, Friday is to establish on a Monday or a Tuesday that weekly pivot doesn't want to be support, that it wants to be resistance. They at least have to get into that conversation today. So you can see here we're trading into the 27s now. Maybe we get a weekly pivot test right here during the webcast. That would be kind of cool. The bulls need to just keep doing what they're doing. The dip buyers are out in force. There's no reason for them to not be. Every time they do their thing, they get paid. And if that's the case, in trading, people will do more of the stuff that gets them paid. It's becoming kind of a no-fear trade, but we could have said that at any point over the last 4, 5, 6 years. But if you want a significant pullback from the 24.40 area, the bears are going to have to earn it, and they're going to have to earn it through price. So I sent out a midday update yesterday. It was basically just an oil update. We've been trading a lot of oil in the room because it's been working and it's been moving, and these are things we look at all the time, but we don't really talk about it anywhere else. So just very briefly on oil. All right, so here's an hourly chart of oil. 46.93, as I mentioned on the video yesterday, is our proprietary lower level in oil. They had tested it a couple times during the day yesterday. They were unable to convert it. They tested it again overnight. We've been long 47 in oil. We're long again 47 in oil. We had a nice pop as high as 74. So at this point, we've taken profits. We've got our risk out at 47, so we're basically in a risk-free trade. They need to convert. If they want to take oil lower, they need to convert. That's the That is the key there. You can see how that plays out on the daily. That proprietary lower area has been a deal for 3 days. It's been tough to get through it. Your low from the second is 74. So, 47.75, 47.74 to 47 is going to be a big deal. You've got the daily mid-band up here, which is slowly trying to seal as resistance. So I may be long right now, but you see a conversion of 47, I'll be looking for $1 headed to the downside before we get a significant bounce. Okay, so back here on the hourly chart of ES, I will catch everybody for the midday update. We are testing 27 right now. 27, 27. Should get a test today. Damn, Skippy, it already did. What's it going to do from here? That's going to define the day. See you for the midday. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade 'em well.